Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday market webcast. Okay, so we had a move down yesterday below the 50-day exponential moving average, below the monthly pivot. We can see it better on the hourly chart. So they seal off daily mid-band there at 26, hourly mid-band at 30, and they dump it out, take it down as low as 56, and then, the bears just blow it. There's no other way to describe the next few hours. It was whippy and choppy at certain moments, but the bears went down. They took out the pre-FOMC area, they took out the roundy, they took out monthly pivot, and they fell on their face. They haven't really done anything in Globex to reverse that. So I think there's still a lot of hope out there that there's going to be some kind of a stimulus deal before the election. There was a little bit of chatter in the afternoon between Pelosi and Munchin, and I think that kind of boosted things. But the bottom line from a price perspective is the bears still, as good as they can look at moments and sealing off key areas up here. It was a really whippy open yesterday that gave about 15-20 minutes of false support at VWAP and proprietary moving average and daily mid-band, and then all of a sudden that 30 cracked, and it cracked through everything really fast. And if you wanted it, you had to chase. And it was a nice trade, but you still really can't trust the bears to progress moves, or at least hold moves down for the entirety of a day. The bears, they can't put an entire day together. They haven't been able to, and that hasn't changed. At least up until yesterday. There's way too much news out there. There's way too much going on that can provide enough optimism to pop it, that it's going to make it very tough for shorts to just put a short on and just leave it. Right now, I think multi-day shorts are, you're just going to get whipped out. You got to take what you can find as much as you can get, and then, either look for the next one or look to go the other way. Expect whip this week, expect chop, expect a lot of periods where the volatility in the market is just going to go away. There were periods yesterday where we whipped and chopped, basically from 2 o'clock till about 3:45. We just whipped around. This candle here looks great as it finishes up at 33.95. What it doesn't show is the congestion all here between 33.70 and 33.80-ish that went on for a long time. And trying to trade inside of that storm is going to get you really beat up really fast. So my suggestion, the suggestion in the room is going to be when these choppy, whippy zones come, you're going to have to back away probably more than you normally would, and you're just going to have to wait for the resolution and then get as much of the resolution as you possibly can. I think this will take care of itself after the election, but it's just going to be a little bit of a strange animal to try to tame this week, because you still got stimulus news. You have times where price wants to flow. You have times where price really wants to die. And the majority of the time, it's not really respecting a lot of levels. And that's just the reality of how it's trading. It traded weird before the last election 4 years ago. It's trading weird now, bottom line. So you just have to accept it. It is what it is, and deal with it as best you can. And then, we get into November, December, and we get some of these unknowns become known, and we move on from there. So for today, you got volume weighted average price sitting right at 3,400. Your pre-FOMC price still 3,400. Proprietary moving average 0.2 half. Hourly mid-band is effectively 33.96. Price is up at 34.10 now, and you've got it broke out about 6 o'clock this morning over the top of a lot of that noise. Daily pivot today is 33.99. I'll be interested to see what side of the roundy we close on. Unless the bears get some news, I would expect us to spend most of the day above 3,400. There's going to have to be some negative news that's going to take it down. In a vacuum, the thing wants to drift higher. It always does. So up above, you've got daily mid-band 34.28, the 9 days at 34.38. You see the weekly pivot up there at 34.50. I'd love to go see that because that's a lot of directional price. If it doesn't want to do that, then we could fight over the roundy and hourly mid-band and daily pivot and things like that for the majority of the day. Underneath, you've got the monthly pivot. It wasn't able to hold that. Yesterday's lows are down at 56. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.